A practical definition of inventory will be the accumulation of certain goods under certain controls and purpose. Inventory management has evolved over time until we reach the present day, where the controls are getting more and better.
Objective. The NIF C4 inventories is a financial information rule. Has a objective established the accounting treatment of the inventories, as well as a provide guidance to determine the cost of the inventories and its subsequent recognition and as an expense in the income statement.
Rich. The provisions of this NIF are applicable to all those entities that issue financial statements in the terms established in the NIF A3, and it applies to all the inventories, except those made up of, from the pillar point of view, the financial instruments, biological assets related to agricultural activities and agricultural products up to the time of harvest.
Valuation rules. The inventories must be valued at their cost or net realization value the lowest. For net realization value means the amount received in cash, cash equivalents, or in kind for the sale of the exchange of an asset. It is also known as net selling price and net realizable value. The cost of the inventories must include all purchase and production costs that have been incurred to keep them their current location and condition. Inventory valuation methods. Acquisition cost is the amount paid in cash of equivalent for an asset or service at the time of its acquisition. Standard cost is determined in advance, taking into account the levels of use of raw materials, labor, and manufacturing costs. Retail method is determined valuing inventories at their selling prices less an appropriate percentage of gross profit.
Related recognition. A specific cost requires a detailed record of information to keep related to each purchase operation in order to identify the specific invoices to which the available merchandise corresponds to the end of period. PEPs. The cost of the first entries is that for the first exists. WEBs. The cost of the last entries is that for the first exists. Weighted average. The process to calculate the cost consists of dividing the amount of the balance between the number of units in stock. This operation will be made on each purchase whenever there is a change in the balance and stock.